Hello Year 11. In this example, I'm going to show you how to complete exercise 5.9 from textbook, page 332. So we're using weighted average costing. Let's put that in there so we know. Cool. Alright, so your first step is to read the question. From the following data, prepare a stock card using the weighted average method of costing inventories. Prepare a general journal entry to show any discrepancy found. All figures are provided net of GST. Alright, so then we're given a list of transactions. On the 1st of October, we had 850 goods on hand at a value of $6.50 each. So 1. So this is our balance. The balance we only record in our total units on hand. We don't record them in the in or out. So we'll say quantity 850, unit cost was $6.50, which gives us a total cost of quantity multiplied by the unit cost. So that's how you start it off. On the 7th, we sold 200 goods. So we'll have sales. And if we're selling something, it means our inventory is going out. So in our stock card, we'll record that there's 200 sold in the out columns. Now, the formula that you should be using for unit cost here is equal to our total units on hand, the last unit cost we had. So you'll just say equals JH. And then again, you can do a formula in here. Quantity multiplied by total cost gives us our total cost there. Quantity in our total units on hand. What we're going to do is set up a formula which will allow us to just click and drag to fill in every other cell below here. So we say equals our old quantity, the one above, plus the quantity of any units coming in, minus the quantity of any units coming out. So as you can see in this, we had nothing in the in column, but we've got 200 in the out column. So what we're expecting to see is 650 in our quantity. It's really important that you use formulas in the exam because it'll just save a lot of time. Because now I can just click and drag that down. And then as we put data in these columns, it'll update automatically for us. Okay, next step, our unit cost. So this, again, we'll put in a formula. It equals a total cost divided by our quantity. Regardless of which column, which cell we're in, that's always going to be the formula. So at the moment it's not going to work because we don't have anything in our total cost column. I'll just click and drag that one down. And we'll update it. So now in our total cost, similar to our quantity calculation, we'll say equals the total cost from before, plus total cost in column, minus total cost from the out column. See how that's updated that? And it's put it in at 650, so it's still 650 for our unit cost. Click and drag it down. Now you don't have to even look at this anymore. It's just going to automatically update for you. And it's just a simple matter of data input based on those transactions. So on the 9th, sorry, I should put the date in there. That was the 7th of October. Oops. So on the 9th of October, we purchased 400 goods at $6. So we'll say purchased. If we purchase goods, our inventory will increase, so that's coming in. 400 goods. See how everything is updated over here? The unit cost was $6, and then that equals our total cost, 400 times by $6, which again updates this. So now our weighted average cost is 6.3. So see how it's changed from the 6.5? So it's $6.31 if you round that up. That's actually not a bad idea in your exam to just decrease those decimal places so it looks like dollars. Okay, So then on the 11th of October, we return 50 goods bought on the 9th of October to the supplier. So on the 9th, we purchased 400. We're now returning 50 of those 400. So we're going to put in returns. Actually, we'll call it purchase returns. Purchase returns. Now, if we purchase something, it's coming in. If we then return it, it's going out. So it'll end up in our out column, equals $50. Our unit cost is whatever we paid for it originally. So you can equal that E7. And then total cost, again, is our calculation. So again, you can see that our unit cost and our total cost have updated. So we've returned them, so our total cost has decreased. Makes sense? It does. Right, so on the 15th of October, we sold goods. If we sell goods, that's going out. Our inventory is going out. So we sold 500 goods. In this out column, anytime you have a unit cost, it'll be equal to the total unit cost over in this column on the line before it, so 6.33. Tab across equals 500 times by the 6.33. Update again. Okay. On the 18th, we also sold goods. So that one above should be sales. So we sold 450. Again, we're going to use this amount here. Update again. So now we've only got 50 total units. I don't know what we're selling now, it told us. We've only got 50 goods left. On the 20th, the 70 goods sold on October were returned. So this is a sales return. So different to our purchase return, sales return is when someone who's bought something from us then returns it. So we're assuming that they're all in perfect order, and we're going to put them back into our inventory. So 70 goods sold on the 18th were returned. So 70 goods, those in the in column, so they've come back in. Now, they were sold on the 18th of October, so we need to go back to the 18th and use that amount there. So that'll be equals G10, so it should be $6.33. Multiply those together and update it. So you can see that we had 50, we've added another 70, we're back to 120. Make sense? 25th. Purchase 600 goods at $7 each. So this is a purchase. If you've forgotten whether that's in or out, you can look above. So you add in 400. So anytime you purchase inventory, you can increase that inventory record. So we purchased 600 goods at $7, which equals 600 by 7, 4,200. Now, as you can see over here, we've updated our quantity. So we've added 600. Our unit cost has adjusted itself. So it's calculating that based on our total cost divided by the quantity, which our total cost is calculated saying what was our old total cost, add anything new, and then minus anything going out, which we didn't have any. So because we've adjusted that figure there, our unit cost as a result has changed, as well as this figure. Pretty simple. So it's really just data entry once you've got those formulas in. If you know those formulas in your exam and you know whether inventory is coming in or coming out, this should be pretty easy stuff for you. Alright, so on the 28th of October, we've got purchase goods at $8 each. So it's purchase, there was 500 goods, purchased at $8. So we're going to find out the total cost. And there you go, automatically updated for us. Okay. On the 30th, sold 1,000 goods. So it's a sale. That means those 1,000 goods are going out. Out column. Yep. Now, when we sell something, we record the weighted average cost. So we'll go to the one above. That's the J13. Then we're going to multiply those together, and that should update for us. So now our weighted average cost is $7.34. So it's changed from the beginning. So we've been buying goods at a higher rate. Okay. All right. So on the 31st of October, 2015, we had a physical stock take which revealed that there were 225 units on hand. So what we've got recorded here is 220. So we need to add in the other 5 units that we still have. So what we call that is an inventory adjustment. Put in our 5. For the unit cost, will equal the one above in that total. And then we will multiply those two together. So now 225 is matching. And our final unit cost is $7.35. The last step then is to do a journal entry. So it's probably a good idea to maybe line that one off so that we know that that's the end. And then in here we'll say general journal. Journal. And it'll be on the 31st of the 10th, 2015. Debit column and a credit column. In here, this is where we adjust our inventory. So inventory, the asset account, which is called inventory control, is increasing by this 5. So we're increasing inventory, the asset, inventory control, by 5 units, which according to our graph here, should be this $36. So if we go, now the other side of this then is our inventory adjustment account. So we'll credit that. So that's like it's an expense account that's decreasing, which doesn't really make a lot of sense. But what's happened is we've expensed it in the past, but we actually still have those 5 units on hand. So then you can just adjust those for the dot points. I'm pretty sure that's it. Yeah. So that's easy. And that's done. That's all you have to do. So that's how to complete a weighted average stock card. You might like to change this up so it looks like it's on its own. Obviously, this general journal is not part of your stock card. That's like, you could put that on the side if you wanted. Anyway, that is all.